Hey everyone, this is Kevin from KL Investment Strategies, and what I'd like to do today is talk to you about 3 examples of how to trade off from support and resistance. And the only thing I want to look at today is the daily charts of the S&P and a couple of different stocks to show you how to look at your support and resistance areas and determine when to get in and when to get out. Now, this first chart is the daily chart of the S&P, and your red line here is what they call the 200 period moving average. The 50 period moving average is in blue, and the green is the 20 period moving average. Now back, probably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 months ago, you can see that we broke through all areas here to the upside, which this area here would be what they call resistance. So once we broke through these period moving averages, we broke through these resistance areas, and then when we started to get the steep angles on the 20 and the 50, we could anticipate that on any pullback these would hold as support, and then you would continue to see the upside move. So you can see once we broke these areas, we had a nice upside move from about 1100 to over 1200 and came back to the 50 here, and with the angle it looks like that's the reason that held as support and then continued to bounce and move all the way up to 1350. Once we got to 1350, you can see we bounced down below the 20 period moving average, and we actually broke this 50 period moving average here, which actually should give us a little bit of a warning sign that we're starting to lose or have a little bit of weakness when we get up into this area. So that would have been an area that, if you're only watching the daily charts, that would have been a key area to watch, that when we broke that 50 period moving average, because actually we could have come all the way down to here to the 200. But notice we did bounce back up above the 20 and the 50. We actually created a little bit of an inverted head and shoulders, which then gave us this pop here up to about 1375, and then again we broke back down to the 20 and the 50, came down to the 200 with a fairly steep angle, and then bounce back up again across the 20 and the 50. So far we're looking okay into this range here, but then what happened in the end of July, you can see here on July 29th we actually broke the 200 period moving average. And on July 29th I sent out an email alert to our Premier members letting them know that we had broken all areas of support, and the next area could be all the way down into this 1050 range, which would have been this last area over here. So that is just the type of alerts that I send out when I see something on the charts that indicate we could be seeing something very dramatic either to the upside or the downside. And as most of you know, that in September and actually August, we did not have a very good time in the markets. We dropped from 1085 all the way down to below 1100. So that would have been a key warning right there that you might have wanted to either take some profits or put some tight stops on some of the investments that you own. So that's the S&P. Now I'd just like to show you some individual stocks and show you the same type of scenario. I'm sure all of you are aware of the things that have happened with Netflix just recently. What happens is, you can see as this goes up, it has a very steep angle on the 20 and the 50, and it continues to hold those areas as support all the way up to this 300 level. Now, 2 years ago, this was a $40 stock, so had you had your stop below these levels here, you could have ridden this all the way up to 300. Then notice here we broke the 50, came all the way back down to the 200. Once we broke the 200, then all bets were off on how far this was going to go. And as a matter of fact, if you're keeping up with the Netflix news, right in this area is where they announced they were going to have a 60% increase on the prices for their streaming video, and they were also going to separate into two separate sections between their DVD rentals and their streaming videos, so you can see what's happened since then. But I just wanted to show you how you can watch this as it follows the support areas, and then what happens when it breaks down through support and what could happen after that. And the final one I want to show you is Green Mountain. Again, it's the same type of picture where once we start this big move up, we get these angles on our 20 and 50 and they hold, and then once we break down, then it breaks down significantly. Now in this particular one, in case you're familiar with patterns, this is actually a head and shoulders where you have the head here, you have a shoulder here and a shoulder here, which if you measure the difference between this area and this area, you could take that 110 to about 85 and anticipate that it might move down that much further from this area. So if you take 85, about 25 points, you could actually anticipate that this is going to move down right into about area, which you can see right in here is the bounce that we got off from that. So that's how you also can look to trade a head and shoulders. But you can see where we held support going up on these steep angles. Once we leveled off and these were not as steep, you can see how we break down, and every time we break a level of support, you can see how each individual stock or the market reacts once we break those levels of support. So this is Kevin at KL Investment Strategies. That's how you trade period moving averages and support and resistance. Take care.